What's up YouTube, it's Louis here, I hope you're all well. We're looking at Quant today, the Quant BTCUSD chart. If you're not aware of this chart, it goes back all the way until 2018, so if you want it, it's just under the video. You just need to copy and paste that onto this chart. But in the last Quant update, we were essentially saying that although everyone was getting excited on Twitter, a lot of the Quant Maxi cult pages, it's like a cult out there, the Quant Maxis, honestly. And I know a lot of you part of it, but they were getting excited over here. Guys, this is just running into an old support. Over here, you were holding a support. It was the neckline of the inverse head and shoulders, and all you were doing was flipping it into resistance. Even though we pumped above it there, I also told you this is not good enough for me. I just believe we're going to head back lower. We did. We spiked off our one of our first targets over here, this area between $74 and $93. And so running back into the old inverse head and shoulders, now resistance. So completely confirming the invalidation of $400. That right there is the nail in the coffin. If it's not enough for you. By the way, even if we do see a close above the 200 daily EMA, again, you've just got EMAs ahead of you that are resistance to push you back under. You can see even if you were to take out the 55, we also got the $150 psychological resistance. This is where we saw a pump actually from 150 all the way to 400 something. So that was way back here. So from that area now, if we're ever pumping into it, we should get rejected. That's why we initially saw a big harsh rejection, and so that's why I was pretty certain that we were going to continue lower, even with the reclaim of the 200 EMA. Now we've got another nail in the coffin over here. But we can see if we were to put the fibs from the top to the bottom, if we do start to come back up, we do have a golden pocket between here. That is green, let's make it gold. So again, another key resistance all the way up until $160. So the fibs are telling us, even if we come into here, the expected move is a continuation down, because this is your push phase, exhaustion, continuation. Only if you get above that, then you start to create something called a reversal wave, but it's not what should happen, guys. When you use fibs, it's a Fibonacci retracement tool. So you measure a push, it gives you the retracement before continuation. You don't have to go all the way up until the 618. You can stop at the 050, which is lining up exactly as confluence with the 55 daily EMA. So if we got a miracle where we pushed above this, this is a key resistance going forward, and you would still eventually lose the low. So that is my expectation. Again, because this is such key resistance, even if we come up into it and we fall back to this key support, what would you be forming? A shoulder that would have a left, a right, and a head and shoulders pattern. Forget this head and shoulders pattern. Forget it. Let's get rid of it. We can take this as a one top, second top with a higher high. That is definitely possible. That's what we've seen with Bitcoin. With a W pattern, you've got a double bottom, exactly like this. You've got a double bottom with a higher low, and you've also got double bottoms with a lower low. So it's the same with the M patterns, you just flip it upside down. So we can still have double tops with high highs, and that's essentially what we saw with Bitcoin with our second top in November last year. First top being in April, March, second top being November, December. So essentially you can make a higher high and actually still head lower. But of course you need to break your neckline. And so that's why I'm saying we're bouncing now, because this was support. And of course we've got resistance going forward here. The 150 psychological, the 160 golden pocket, the EMAs down here, the 200 EMA down here. So at any of the points, we're going to eventually get rejected and come back down to support. If you lose this support, then yeah, you can see you're validating a head and shoulders pattern. This is all step by step. This is not set in stone yet, but I just want to bring your attention to it. This is what could be forming, because everyone's getting excited that we bounced off support. Even if you're bearish, believing we're going lower, you have to understand you need to bounce off this. But even if you're bullish, you need to understand you're going to bounce off this downwards. So we're essentially trapped between this range. We're stuck between 83 and 160, all the way, well, 168. We're stuck between 80 to 168. Over 100% move from the low to the top of it. And we've already in the past had a fake out. That was a bull trap essentially, guys, because we never held this weekly bullish cross. Can you see we never held the weekly bullish cross, which would have been nicely in line with this weekly close. So by closing below this weekly close over here, it means the move above it was fake, because you should be finding support on it. When you lose a swing high, you head to the swing low. So that's why we came back down to here. That's why I was able to give you guys this. I want to bring your attention to the fact that there's over 1,000 of you watching, but still not even 200 likes. We should be aiming for 500 likes, guys. Come on, let's really push for the likes. I do this every day for you guys. I'm not lying to your face like half these quant cult maxis, whatever you want to call them. So please do me a favor and bump that algorithm, like, subscribe and comment. But I will also be doing a fan show, so do check out the memberships where the members can actually come on the live streams and give their thoughts and opinions, and where we can of course agree or disagree and debate. So yeah, if you're interested in that sort of thing, please leave a comment down below. I want to say thank you again to Tolly, because he did send in a super thanks. If you want to donate and support the channel, there is a super thanks button underneath, and you can of course as well, just as a thanks, but you can also have a chart request as well. So thank you guys for the continued support on the channel. Let's smash 5,000 subscribers and we'll continue with this video. So yeah, by of course closing below that key resistance, we head to the range low. And so of course going forward, even though we're bouncing off the range low, this is your range high. So again, we should expect this to be resistance. So even when we run into it, you should initially reject it. We're seeing that already at the beginning of the week. So it's showing you that the bears are still there. And even if we push through that, we've still got these daily resistances well ahead. So let's say we don't even get that. Let's say the bulls, they don't want to see this potential head and shoulders. They want to be disillusioned to it. You can, again, call this an M pattern. If you eventually lose this neckline down here, you're going to validate a target, which is just the level below. It's as simple as that. So the level below, where you just came from. So back to $40-50. This is actually saying you could go lower, but we'll take it step by step. But essentially, yeah, those are your levels. If you ever lose 83, you're going back to 50. Just as I said, now we reclaim 50, we're heading to this. If we reclaim this, we're heading to 150. It's exactly the same. Now, if you're not holding those levels, you fall back to the ones before. So all the levels we've said in the past are valid again in the future if we're losing the key support. So lose this key area of support, you head to the one below. Okay, thank you guys so much. Again, everything is step by step. The next move that I am anticipating is down back to this area. But again, if we do randomly see a pump above the 200 daily EMA, which closes above it, just realize that there's such key resistance going forward. Your capitulation began here, so you need to reclaim where you capitulated from. And not only that, is that the highest high? No, it's way up there. So you need to break above that as well. There's just so much work to do, guys, that I hope you understand that it's not expected we go up. It's not expected that we break this high. It's expected that any push up is a lower high. And I want you to realize that a lot of the pages on Twitter that are quant maximalists or whatever, they're not out there to help you, or trust me, they're not telling the truth. Right now, I'm trying to do everything I can to show you the charts, to best read the charts. And with Bitcoin making a lower low, how is that at the bottom if it's just made a lower low? So expect quant to follow, expect all the coins to follow. It's as simple as that. Thank you guys. I'll catch you in tomorrow's update. I know a lot of you are going to hate me because of this video, but I just want to simply give you the truth. Check out the channel memberships, send in a super thanks if you can. Please like, subscribe and comment, and I'll catch you in the next one. Peace.